following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host once more into the breach. Dear friends, as always, what do we like to do here? We like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
As always, we like to meet here. And a little troubling for me today. I was hoping that we would bounce up a little high and then pull back. We're up 28 points on the S&P cash. The reason I was hoping we were going to pull back is I didn't want to see these highs broken out on a lighter volume, and certainly it looks like it's going to be light. 2.14 billion shares on the New York Consolidated Tape. We've had anywhere from 2.4 to 2.7 lately. So this is fairly light. Of course, we're going into earnings on Monday. The bar is exceedingly low, but I didn't think a lot of people would want to buy. Just okay earnings statements coming out from probably many companies starting next week. Alcoa after the bell on Monday. And then, of course, I think we get into Thursday before we really start getting into any others that'll move the market. It is expiration week next week. We did show kind of around a 2100 level for expiration coming in this morning. I'll watch and see what that does now. I don't have any short-term positions on. Do have many long-term positions on, and they're doing fairly good. Volume actually in the individual stocks, not all that bad. It does look like maybe a couple of these sectors are topping out. We'll talk about them. Thinking that maybe the IBB, maybe this is kind of close to the top. Got some bad news in that sector today. Kind of interesting to see it up anyway. But we'll talk about that and many other things. But before that, we have to talk about history, because without history or knowing history, we would be doomed to repeat it.
And it's all just a little bit of history repeating.
On this day in 1776, a 2,000-pound copper and tin bell, now known as the Liberty Bell, rings out from the tower of Pennsylvania State House, now known as Independence Hall in Philadelphia, summoning citizens to the first public reading of the Declaration of Independence. 4 days earlier, the historic document had been adopted by delegates to the Continental Congress, but the bell did not ring to announce the issuing of the documents until the Declaration of Independence was returned from the printer on July 8th. And it was signed actually all the way through the fall. It kind of made a road trip, and people put their signatures on. A lot of people think that July 4th is the day that it was signed, but not really. That was the day that it was adopted, and has become kind of the symbol of our, not only our independence, but our freedom. And we'll get into it later in the show. But, there's nothing like trying to limit a government, which is the purpose of the document, was not to tell people what the rights were, or to tell the government what the rights weren't, what they couldn't do. And, of course, that's been an ongoing battle by fascists, even up to this day. They would all like to have control of what everybody does, says, wears. It's almost a sickness, isn't it? And this document was written to weed out the sickest among us, although some still do exist. Today marks one more time that we've broken the S&P 2100 level. Now today it's been broken up and down 25 times in the last 18 months. If people don't think we're in some kind of trading range, I have a feeling that that number's got to give you at least some pause. I like to go back and see if there are any century marks out here that actually have been broken more than this over time. But it seems to me like 25 times either going through it, going back up above it, going below it. Quite a few. That's from Bespoke Investments. Put out that little ditty today, and that's it. Yes, it is. It's near Mr. Z's house and Mr. Z's neighborhood. But I'm sure he knows all about that. Jobs numbers came out, very interesting. Market started going up higher on that. But you can't always just say, hey, that was the cause of this. It actually looks like there was a lot of stuff going on over in Europe. We saw the DAX close up 2%, and it may be a lot more cause and effect with the DAX than anything with job numbers here in the United States. People that I follow, I check their blogs. Most of the people figure that the lumps coming in and out of the job numbers almost correspond exactly to the Verizon numbers as people coming in and out of the labor force from the unions from their strike. I think it was some 35 or 40,000 people. And of course, what we should look for next week is all those people that were in those union jobs that are now out of work to come back and start claiming unemployment. And we'll probably see those job numbers pop once again, but pretty meaningless. And most people, I think, kind of took that, at least that bent in the din this morning when we watched them roll across, that we don't have a lot of faith in them. And when I see a lot more about what went on in Europe all the way to the close, like I said, DAX is up 2%, is a much a bigger deal to me. And of course, if you just look at some of the things like, let's see if I can find it. Let's take a quick look at what do we have here. A quick look at the Euro banks out here. Let's see what we have. Go to that. Let's look at it percentage basis and see what we have. Strongest one is Banca Carlig, which is I think it's a Spanish bank. It's only a 31-cent stock, so no big deal. Royal Bank of Scotland, RBS, up 6%. ING up a little less than 6%, a little more than 5%. Lloyd's Banking, Banco Santander, a little less than 5%. Barclays, 4.4%. Prudential up 3.6%. Deutsche Bank up 3%. Probably the most important of the bunch. And we talked about whether these things were going to make a bottom when everybody figured out that everybody peddling the end of the world crapola because the commies didn't get their way over there in Europe was probably heavily overweighted. Yes, I did say miserable commies. I just said commies. I said miserable commies. Like I said, everybody always wants to rule the world. What a great song that was, wasn't it? Everybody wants to rule the world. Anyway, HBC, even it's up almost 2%. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yep, Tears for Fears. What a great song. Most people don't know that, I'm trying to remember which singer it was, is the son of Wild Bill, the predecessor of the OSS and actually formed the CIA. He was always mad at his dad for not spending time with him. Kind of shot back at him the other way. But what can you say? But always very interesting to see that come back together. Big movers out here today. Just a random thought. I'm going to throw this out here. And that is there a better gun salesman ever on this planet in all of history than the president? Every time he talks about molesting the Second Amendment, it's good for another 20 million guns on the market. Smith & Wesson, of course, up fairly big on the news of the shooting. We also have, what was it? There was another gun company out here that was up strong. Just random thought out there. We're going to find out one day that they were paying him under the table to do this. Just a thought, because it seems like it works like magic every time, doesn't it? Anyway, BCS, Barclays, we'll take a quick look at this bank. See, get back in here just a little bit more. You know, you got a little bounce out there. It's still in this trading range. Not going to make a great deal about it. We did bring up this move back here and thought maybe there was some kind of at least temporary bottom coming in these banks, and that was the June 27th low with 150 million. 24 million on the 6th. That sets out a low out here. And that's pretty much it, isn't it? It's just... you're still in that trading range. You're going to close a little higher here today. But maybe the worst has come in. Maybe the peddlers of fear and disaster are a little out there. One of the other stocks I wanted to take a quick look at was Juno. This was a result of a drug trial. Unfortunately, the drug killed killed I think half of the study group pretty quickly, and they're taking it off the market. Oh, I got the wrong. Is that wrong one? Oh, that was Juno Lighting Incorporated. It's got to be another Juno then, because there was a Juno. Maybe they both popped down today. Let's take a look at the headlines on this one. I just picked it up and saw the big gap and figured it was the same. Oh, maybe it's not Juno Lighting. Do I have it wrong? It is. I don't know why it says Juno Lighting here. And I checked the symbol. It is correct. No, that should be it. Juno Internet? No, it's Juno something else. I'm reading the Juno announced a critical hold for its asset, JCard 015. Why this says Juno Lighting? Someone's got it wrong there. Anyway, down on heavy volume. And, you can't do much more than have a drug kill everybody to say that there's an end of it. The next support level comes in at 22.37. Even though this blew out today, the IBB is kind of back up. This is about what I was thinking and where that I thought the IBB could bounce, which is this kind of little gap from the 10th of June. It's not a huge volume down day, but it was big enough, 1.9 million shares. We're only doing about 1.2 million shares on the IBB now. IBB really did not go up on a lot of volume. I was hoping for this bounce here. What I would love to see is maybe a low volume pullback to the 240 area to signal the maybe a long-term bottom. I think that would probably also occur within about the time frame of getting into the election and maybe the whole sector coming out of the political doghouse that it's been in for a while. But just a thought out here. Okay. What do we have? What did I want to look at next? Lost my train of thought. It's derailed. Looked at the was that? Looked at biotechs. Oh, I know what I wanted to look at. It's finally come back to me. My senior moment is over. Barracuda Networks. Nice move on this one. And of course, they're big into not only setting up networks, but security. Pretty much going after their high out here at $18.60, 3.5 million shares to 3.4 million shares. So kind of spiked right up to the highs. Again, most of these moves don't blow out the highs. They may do it on volume, but a lot of people just not willing to buy anything more than previous highs. Probably going to been a good way of buying stocks here for a while. But a nice move out here. Just probably not enough. Probably have a trading range setting up here. Let's see what else is in this kind of sector here. FireEye, up a little, no volume on that one. And CYBR, see if there's anything on that one. A little better on CyberArk, although same kind of thing. It's gone through its previous high that had 626,000 shares with about the same volume today. May hold above that high. Some of these are starting to look a little bit better out here. eBio, 11 Biotherapeutics, nice pop-up on this one. It had some nice news. Again, not breaking out the highs. I did like the test of this June 10th low, though. Wish would have gone through the $1.62 of that June 10th low that had 2.5 million shares. Got close, 4 cents on 1.7 million shares, and has a nice little bounce out here on that one. Gale, G-A-L, Galena Biopharma, down a little on that one. I don't see a great deal. It moved pre-market but didn't open that way. The gap has a gap. and not a lot of volume out here, but we have at least finished closing these big gaps down that started on May 10th in the Gap stores. And I think this was on, if I'm not mistaken, on retail sales numbers that looked a little bit better. Yeah, Old Navy came up, and that was pretty much the weak sister in everything that they were doing. So that helped a little bit. You're back to this area that, where am I at here? You're back to this area, though, that really starts being a real hard hill climb. This is this huge gap down and move down with volume. This is a huge sign of weakness that comes back on 4/8 with 33 million shares, and you're basically at the bottom of that now. Make sure to hang on to 4 o'clock today. Normally we just do a repeat, but I'll be doing a Tech Insider Hour. We'll be talking broad brush strokes on technology, and my specialized newsletter comes out once a week.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had a couple of emails and questions. The first one, first-time emailer, Lars asked about American Express and about a possible short position. I can't say that I want to either be long or short American Express. I just don't see the risk reward in this. If you were going to short this, I would probably wait until after earnings. I know that's kind of tough. I just don't see a great play either way on this one. Light volume today, I mean, could it get back down to 57? I think it could. Option market makers for earnings on this are basically saying this thing should be somewhere around 60 bucks. So maybe there's a little weakness to it, but nobody on this one, at least in the option community, thinks that there's a lot of movement into earnings. The chart kind of looks like a descending, or I mean, a asymmetrical triangle, which means tighter and tighter trading. I just don't see a great deal in this one way or the other. If I did, you know, the VIX is at about 13 right now. To me, the one thing you want to be doing is looking very hard at options right now, because at 13 doesn't mean it has to be. But if you're at a VIX of about 13 and you're an implied volatility of less than 30, you want to be thinking about using options instead of playing the equity itself, if at all possible. There's nothing better that I like than the setup right now, and that is the possibility of buying calls or puts with very low volatility and finding a prime candidate. Like I said, I'm not thinking an AXP moves a great deal one way or the other. Another question in the den is proof point. This is in the security business. You know, he's talking about getting it back into it long term. I'd want to look at somewhere around that $57, $58 area, maybe as high as 59 bucks. Got a pretty decent candle out here today. I would have liked a little bit more volume in this. I think you could get back into this gap area, and that would be, you know, you got a lot of consolidation, congestion areas right in that $57 range. And that's where you'd want that thing to come back down on extremely light volume and check in. What else do we want to talk about? As I said before, we'll have a special 4 o'clock hour when we do nothing but talk technology tonight. I invite your phone calls and your emails. You can always call me on this show at 877-927-6648. Email me at path@tfnn.com. We'll try to get to your emails and questions in that hour about technology. Much more maybe fundamental, or maybe my view of the longer term instead of just the charts, which we kind of do every day. ING, we talked about that one today. Nice little pop on this one. Still not out of any kind of gravitational forces of these lows. But this is the way you start making a low, and that's at least putting in one. You want to probably get back down to this 926 area yet again on much lighter volume, and maybe even bounce around there for a little bit. But that's kind of it. What else do we have out here? Kite, another pharmaceutical company. It's down a little bit today, but massive volume on this one. Let's take a look at the headline to see what generates such massive headlines and volume. Apparently, they had some kind of deal with Juno. See if there's anything else. No, that looks like it. So it was down a bit. Not as bad as it could be. Certainly, you've broken this consolidation range that goes back to the 10th of June. And you know what? Normally, you get a little bounce like this. If this thing bounces back into this trading range, you want to be watching this one very closely next week. See if this one has earnings coming up, what the earnings date is. August 8th. So it's a little ways away. I don't think that's going to be it. LEDS, Semi Leads Corporation, monster move yesterday. It's kind of a penny stock. Man, you know, if this thing can come back down to the low $2, it would be kind of interesting. Maybe $2.50. What was the news on this thing? I don't see it. Oh, got rid of a bunch of dead wood in the CEO office, and the earnings came out a little bit better than they thought, and got rid of the dead wood companies out here. It's down today fairly significantly, but a lot of people, this is where you have to look at these companies that are highly short, and whether or not it's even practical to think about being short these stocks. Of course, they were short for much higher. People were probably betting that this thing went out of business, but you can have moves like this. Even, the last couple of days, even into that 30% of the shares just a couple of days ago. Now, when this thing started moving up off the bottom as a penny stock, about a third of all the shares, as soon as it started moving, were shorted each day. So someone really took it in the proverbial shorts out here on this one. Let's look and see what it had. Days to cover recently had been as many as 5. So, interesting. But that's how you have these huge moves out here when market conditions are poor. We're going to look at Lloyd's out here real quick. Again, another pop out here. These things are kind of gappy to begin with. But, you kind of think that this $2.47 low on July 26 needs to be tested now on Lloyd. I don't know, there's a lot more on that particular part of the business. Metabolics, this one's going sideways as penny stocks. And of course, if you're thinking that we've made a top, one of the big signs is these penny stocks running. So I'm going to keep a little closer eye on these, especially with the incredible light volume today. What did we talk about? Someone wants to know what the big stocks that were being shorted yesterday were. On the QQQ, Netflix, 35% short yesterday. Let's see how Netflix did in FLX. Yeah, nice little pop out here today, lighter volume. Cerna, Intuitive Surgical, let's take a look at that. ISRG was being heavily shorted yesterday. And a little, very light volume move higher out here today. And you got to kind of take a look at that. We've got Mark from Fort Collins, Colorado. How you doing, Mark?
Good. How are you?
Fantastic.
Good. I've never talked to you before, but I wanted to get your thoughts on the Triple D Cup.
Well, I cover this fairly extensively in the Tech Insider newsletter. Oh, we're going to the break. Can you hold through?
Sure.
Okay, we'll be back on the other side.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY or periodic rate of interest is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And hopefully we're back with Mark.
Yep, I'm here.
So what's your time frame on this one? You just looking for a trade? You want to buy it forever?
I'm actually into some 1250 calls that expire next Friday. I'm up almost a full 100%, and I'm just kind of, it looks like it just kind of did a little bit of a 100% move of a move when it hit that 1417 again, and I'm just kind of trying to see what your thoughts are generally on the company, and you're probably more familiar with how it trades.
Yeah, I mean, it's kind of in this lower trading range. Not a bad-looking one from about 14 to the high 11s. You had some nice wind at your back yesterday. Nice pop in the short interest. Let's take a look at the longer time. Here's the reason I think you would probably be more interested. Overall, it's about 10 days to cover. So if you get any good news out of this, you'll probably do well. You know, of course, that if you're buying options that you want to be out. If you're thinking about selling, you want to be out by about 1 on Fridays, right?
Oh, yeah.
Okay,
Yeah.
so you were planning on maybe carrying these until next week anyway?
I was maybe going to maybe take a few off the table before the close. It's got, unfortunately, the spread on the options is huge, and
yeah, the thing is that you really by about 1 o'clock, you've probably given away just about as much as you would selling it on Monday.
Right.
So that's why I'm just saying, you know, normally if I don't sell by noon or so on Fridays,
Right.
I just figure that it's probably better to roll the dice and think about selling on Monday, because maybe you get a little bit, you get a little bit more of a pop.
Yeah.
But just in the short term, you know, you got 10 days to cover for the last reporting period. You got some decent shorts yesterday. They'll probably, I think what we're seeing today is a lot of those shorts kind of getting out today. So you do have a little bit more of a risk on Monday. What are those things trading at right now?
The 1250s are trading 138 bid, 176 ask. Their actual value is $1.62, right?
Yeah. So they're giving you nothing for the premium.
Right.
So I'd have to sit on my hands. I mean, just playing game theory. It doesn't make any sense for me to give away 3 cents of premium or a nickel of premium for the weekend and just hope that maybe some of the 10 days to cover has a little bit more people that start covering on Monday. Maybe they gap it up. If they don't, you just sell them. Going into Friday would be interesting. Where's my thing? Hang on a second. Let's see what the options have to say on it. You know, this is really where you get into the option market makers at 14. Really start going away. But, you know, there's only, well, maybe, you could probably easily see 1450 on this. I'm thinking
Yeah.
by Monday from just a short squeeze perspective. You got 1417, maybe you get 1450 on the open print on Monday, maybe.
Okay.
I just see, I'm just thinking that a lot of people are sitting short on this thing from the numbers I see, and maybe you get more of a bounce. I dislike the market having very light volume today.
Yeah.
And you would like to see this thing approaching that high on higher volume. If there was any kind of premium to be sold, I could kind of see selling them. It's probably a coin flip here.
Got it.
Now,
when you
go
talk
ahead.
about a time frame for getting out on a Friday, was that Eastern time you're talking about?
Yeah.
Okay. 'Cause I'm a Mountain.
You'll see if you go back and look at options and just look and see what happens. If I went back and found an intraday thing of DDD and the option premium at 11 and the option premium at 1, my guess is it was a quarter at 11 and it's a nickel at 1 o'clock, right? They just suck all the premium out going into the weekends.
Right.
And so it makes it very tough. So normally if I'm going to sell or I'm thinking of selling, or if I'm playing something like the UVXY, the last thing I want to do, if I'm not holding it till Monday, I want to be out by 11:30 at the latest on any of those VIX trades, because it's all the same thing. They will just pull out all the premiums. It doesn't really come back in till about 10 o'clock or 10:30 on Monday morning. And it's almost a free roll because they took your quarter away from you, most likely. I didn't look at the historical intraday ticks on it. But to me, that almost gives you a free roll. If they're going to take it away, I normally just play it. If it's there, if the option premium is still there, I am much more likely to take it, because it seems like if they don't take it away on Friday, it evaporates on Monday morning.
Right.
Just the opposite way. So if they're really bidding up the option premium, or if it sticks on Fridays, I'll normally go ahead and take it and then look about getting back in on come Monday morning, because normally it's just the opposite. But yeah, your premiums will probably start picking up about 10:30 on Monday, and probably get a quarter back, I would imagine, on DDD, just if nothing goes anywhere.
Right. Do you like to, like at the end of the day on a Friday, do you ever like to try to buy some VIX or VIX type entity calls, like the VXX or anything like that, or do you think that's...
No.
Yeah.
No, because normally what happens is like I said, it's about 10:30 before it comes back in on Monday.
Yeah.
So, unless something drastically happens, but I'd have to know that on Friday. Like right now, I have no idea. We probably open up maybe a little down on Monday, I'm thinking, after today. So to me, the whole idea here is, you got to look at your options. But for me, if it opens up flat, my guess is that you're going to continue to see the option premium fairly low. If it gaps away, then I've got to at least have some kind of idea that it's going to. Right. And going into a close on Friday, just too many things can happen.
Yeah. Okay.
And I hate that everybody and their dog is short. That's probably why we're up here today. And when I go and look, if I dig through stuff this week, I'm probably going to figure a ton of people were. I already figured that some or a lot of people were short going into the jobs numbers this morning. And I think a great deal of them are just getting squeezed out into this weekend. So it wouldn't be a big deal to see us drop 10, 15 points, I think, on the open on Monday. But I have nothing other than a guess to bet that on. But if all things were equal, I would not be surprised to see us drop 10 points on the S&P anyway.
Thanks for your time.
You bet.
Bye.
Thanks, Mike. You can be like Mike or Mark, excuse me, and give me a call at 877-927-6648. Email me at path@tfnn.com, and all kinds of other things. Had more things across the email bow. Wants to take a look at Tesla. I think we talked about that yesterday. I don't know if you can use any technical analysis on Tesla. It is now officially in my cult of all-time cult favorite stocks, and that is, can they knock on my front door? No. I have an unlisted address. It's sealed in Funk and Wagnall's porch in a Welch grape jar. We'll see you on the other side of this break.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we got a lot of stuff to go to. We're up 32 points on the S&P cash. Volume is exceedingly light at 2.45 billion shares on the consolidated New York Stock Exchange tape. The problem is we're going into earnings, and as long as we continue to see the dollar hold up, 96.34, I suspect that we're going to see more. This is a sign of more cash coming from Europe into our market. People chasing yields, as we've heard earlier today on TFNN. And I want to see people quit shorting. And I want to see the dollar start moving down as a sign that all the cash that's sloshing our way has come to an end. Even these light volumes makes me think that it's continuing a continuous time to sit on our hands. I don't think we're going to flip a switch and then go to a bear mode instantly, even we're at these high levels. I mean, we may just drift all the way up on no volume to 2,200. That would not surprise me, as this more and more cash chasing any kind of possible return and avoiding places like China and Europe. and that may lead to a cataclysmic high. I just do not see it now. Questions of a blowout at the end of the day. I don't think, as far as I'm concerned, the setup is there. I suspect the setup for any downside to this market is much more likely on maybe some big earnings surprises next week, although we don't see any. Option market makers think that maybe we're somewhere around 2080, 2100 for next Friday's close. I'll see what they do tonight, and we'll talk about it on Monday. But very tough for me to put any new positions on here. I dislike the light volume. For my long-term positions, I just kind of have to sit on my hand. Although if I wanted to get bearish, this is a exceedingly bearish day out here. That's breaking these highs with lighter volume. If we continue to close around this area, that means that we can go higher and for a while. We're talking about Tesla. It is on my list of official cult stocks now. Probably the number one cult stock of all time was iOmega. I suspect that Tesla is now even higher than that. And that is just based on the fact that no matter what anybody says, no matter how many earnings and projections they miss, people keep on buying this thing. The old saying is sell the sizzle, not the steak. The sizzle is all that is on sale here at Tesla. I think that there is a value higher than this, significantly higher than this, in which maybe 2070, where I would think about shorting this one again. The other question that we had was a price line, another one that looks like much more likely to fail and fail majorly. If I was thinking of stocks out here that I would want to short, and that even in a market that's drifting up slightly higher, I would want to watch on a daily and almost on an hourly basis in the coming weeks, there is, I suspect, a brilliant position to be had shorting this thing once everything works out. And that's just, with all the money leaving Europe, the switch out here, even some of the other stocks like Expedia, XPE. I don't have a number yet in my mind, but I think it's coming very close. Make sure to hang on to TFNN. Tune in after the next hour, of course, for my Tech Insider special for the entire 4 o'clock hour. Make sure and give me a call if you have some big questions in technology. More than willing to talk about it in the 4 o'clock hour. So when you can, not when you have to. See you Monday. Same.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.